Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Wednesday, November 10th. It is 6:35 as I'm starting the video this morning. As always, remember to set your video player at 1.25x to make quick time this morning. Let's take a quick look at futures. Equities are a little soggy this morning, off about 0.3. Oil, while it's off 0.4%, we are pushing the highs of the cycle, and I want to show you a graph of that, chart of that this morning as well. Nat gas is off 2.5% and under $5. That's a kind of an important level. Gold has been on a little up cycle, trading about 1825, and I've got a level at 1835 as an important level of resistance slash breakout level. I'm going to show you a graph of that as well this morning. We've got a lot happening on the macro front. Of course, we got Veterans Day tomorrow, where all the governmental offices are going to be closed, but the market will be open. I believe the bond market is going to be closed, so please double check that. But all the data points that would normally be reported on a Thursday are going to be reported this morning. We've got a CPI print that is going to be closely watched. Then we've got job claims, Atlanta Fed inflation expectations. We've got oil and nat gas inventories, and we've got an important 30-year bond auction at 1 p.m. this afternoon. Over on the earnings front, some names I picked out: SoFi, Affirmed, Wish, Open Door, Beyond Meat, and then we've got the Rivian electric truck IPO this morning, which is going to be the focus of all the media and stuff. That's the electric car maker that supposedly has really strong demand for its IPO. It's been raising its pre-IPO opening price steadily over the last week and a half. It has important stakes in it from Amazon and Ford. So those stocks, I don't know if it had anything to do with it yesterday, but Amazon had a really nice run yesterday. Ford was firm. It really didn't do a whole lot, but it's been on a nice run as well. And also yesterday, specifically after the market closed, there were some, horrific earnings responses. Coinbase, Upstart, Fubo, Plug Power, Unity Software, DoorDash, Purple, Smile Direct Club. A lot of names. Not excuse me, not down 2%. Some of these names were down 20 and 25%. And if you are the type of person or trader that likes to jump in on those after earnings moves for either an overdone situation or one that just keeps on going, you're going to want to do a pre-market scan for gap downs, and I'll try and pull that information for you and send it to you before the bell, because that's something I do. But for the rest of us, they're going to set up really, really well for bracket trades, second day trades tomorrow after a trading range is established today. So those are going to really, really fill up our opportunity set for bracket trades going forward. So be aware of that. But first of all, I want to welcome any new visitors to the channel. What I'm going to do and do every day is set you up with key levels, key pivot points, thoughts on the market, that will help you get off to a good start in the trading day. And if you look over in the show notes, you'll see a place to register for all my content. There's a link there that will take you to the blog where you can enter your email address. It takes all of 10 seconds. Then you'll be registered for all my content, and everything that I do will be sent directly to your email box, which is nice and convenient. But the reason I mention that now is I've got a little extra information. Let's see. I want to do this here. Get my pointer going that I forgot to do. I've got a little extra information here about the registration. It's a double opt-in process, and a lot of times that confirmation email gets sent to a spam folder, junk folder. You might have to look for it if you don't see it there. But anyways, we'd be glad to have you, and you'll also get an invite to our trading room, which remains a nice place for ideas and camaraderie with the rest of the team. It's always nice to have friends that are trying to get better and working hard every day to improve their trading. So, US dollar trapped in this range between 93.50 and 94.50. You can see we went to the bottom, back up to the top, now back in the middle of the range. I don't expect any big drama until we either break out or break down from that range. The 10-year yields are the thing that, along with the whole yield curve, you probably heard a lot of chatter about the 30-year well under 2%. That's giving a lift to the housing trade, and I'll have a chart for you later in this set to show you that breakout. But yields have been falling while inflation expectations have been rising. So there's a fundamental disconnect there. And earlier, last week, we had penciled in this head and shoulders formation, and that seems to be playing out. And just from a technical standpoint, I just want to point out these technical moves. If you're a student of technical analysis, you'll see play out time and time and time again. We're talking bond yields, right? We have the head and shoulders formation. We have the breakdown. We have the back test. Then we have the breakdown. And you'll see that move happen time and time and time again in your trading. You'll get the breakdown and then a move back up to the scene of the crime, as it were. That's what it's called often, this line of support and resistance. A breakdown, revisit the scene of the crime, and then proceed down. So in your trading, when you have a formation or a line of support that you've been watching and you get that initial breakdown but you miss it, stick with that trade, because what you'll often see, don't get disgusted and forget about the chart is what I'm saying, because you will get that often you will get that opportunity where price will rally back and then die once it's come back to that support line, which of course then becomes resistance, and that will give you a very objective, tight, short entry for the move down. And then of course the same thing happens in reverse on a breakout. You may say, oh man, I missed it, and then only to see price come back and double check that breakout level and then reaccelerate to the upside. So that can be your second bite at the apple if you miss that initial breakdown. So, of course, here's TLT at the top of the range, and you'd expect at this point this should be pretty stiff resistance. Now, if TLT breaks out above 152, then you've got a little target here, 154. But, this is a pretty wide trading range from 146.5 to 151.5, that's what is that, $5? So technically speaking, if rates fall apart, you could see a $5 move up to 156 here on TLT if you get that breakout. I personally don't expect that. I think we're going to get some backfilling of these open gaps, which I haven't marked, but I have a hard time seeing that with inflation moving to the upside that we're going to see yields continue to go down. VIX took a jump yesterday, popped above 18, but closed below. I would be focused on 18 today as your VIX pivot. And of course, higher VIX trend is going to be bearish for stocks. Our oscillators took a leg down. You can see that here on the NYSE oscillator, we're down at 21. Not really a predictive level. The thing we need to worry about is, was this the high? And now we got a down cycle ahead of us. And that looks even a little bit more ominous on the NASDAQ, where you see we topped out at 48, but that's right in line with the prior highs at 52, 49, 52, 51. So we're in that range. So we'll see the levels on price when we get into those charts. Here's the equal weight SPY. We're still in the range. You can see that PPO momentum is still got some separation. You don't want to see this momentum begin to roll over. You don't want to see RSI top out and begin to go down. We'll see that in price if that in fact happens. Now, here's the SPY 2-hour chart. We've got this bearish rising wedge, and yesterday we had a break of that wedge. So technically speaking, we're on a 2-hour sell signal, right? Because we broke the trend. But the trend has been very resilient, and I think we've got some key levels below that could act as support rather than going gonzo bearish at this point, which you could easily do. I mean, once you get on a sell signal, that's the time you usually want to exit all your longs and go short. But I hesitate to do that because the trend has been so strong, and the dipsters seem to come in at every opportunity and buy it up. And so that's kind of my default position. But with heightened awareness on stops and levels at this point, because it wouldn't take much to get the ball rolling downhill from here. If we get, say, the CPI coming out, or just anything at all could upset the market and send things rolling downhill. So I think today, and I'll show you this on the 30-minute chart as well, I think 466 is a first support level. That is the lows of yesterday. And then we've got a level here at 464 that I think is going to be important. Why? Because you lose 464, then you're almost immediately coming to 462. And then you can see that there's a little void in the chart here. And then, I could see us easily coming back to this 458 level where we had a little time spent consolidating. Here was more or less quickly higher. So we've got open gaps below that. And then, once you lose 464, then, the ball seems to be rolling downhill a little faster at that point. Here it is on the 30-minute chart. And you can see this 466 is, for all intents and purposes, the bottom of this rising channel on the 30-minute chart. So you lose 466, then you've got a void in the chart, and then you're coming down to 462 rather quickly. Not a lot of support in that area. So I really want to hold this 30-minute channel, and I would be, my level of concern would go markedly higher if we were to lose 466 and then 462 for sure. And then we've got a gap down here as I showed on the other chart. So, mark those levels clearly on your chart. QQQ, 2 hour. We had this rising wedge here. I've got a thin brown line here, if you can see it, that we had been above. And now yesterday, we closed below that wedge. We closed back inside the channel. Normally, you would say, okay, back inside the channel, the target becomes the bottom of the channel, and that's all true. That's still there. But we do have some important lines in between, and one of them is 394, which was the low of yesterday. And then we've got this midpoint line here at about 393, 392, right in that area. But I will say this, you lose the midpoint of this channel on the 2 hour chart, then I think you are going to make a quick run down to the bottom of the channel. And that would be, quite a ways down. I wouldn't want to see you just sit in a bunch of short-term positions if you were there. Or what you could do is get yourself some relatively short-term puts as a hedge against your longs to ride out the corrective activity, just to see how far that goes. So here we are in a 30-minute chart. You can see that RSI has broken trend. You can see that PPO has broken below zero. And when you see that, you should be saying to yourself, the door's open for a further down move. And so here's that 394 level. You can see there's a void in the chart just below where our midpoint of the rising 30-minute channel resides. So there, you lose 394 in this midpoint. You could come down to this 389 level very quickly. And then from there, you're just going to come down to the bottom of this channel at that point. So the antenna need to be up here today and probably through the rest of this week. And really what would make us feel more comfortable in the bullish camp is to obviously bounce up and start recapturing levels from below. That would be very, very helpful. Now, moving on to IWM, down about 0.6% yesterday. We've got this 2 hour channel we've been working under. IWM has been doing well with the reopening trade, etc. All those kind of travel, leisure, hotel, airlines, regional banks, all that stuff has been doing pretty well. And so we've got an open gap here. Yesterday, we made a little look inside that gap, but quickly popped back above. So I think we can use the top of that gap there at 240 and a half, more or less, as a first line of support. And then a break below would take us down to this 239 level. And then I think, well, that would fill the gap. That would check off that technical event, a gap fill. But right at the bottom of the gap aligns with the bottom side of the rising channel. And if you're long IWM and you get a break of this rising channel, then you've pretty much got to exit any long positions that you may have. And it doesn't mean you got to go short, but it means that further downside is going to be likely. And notice over here, there's not a ton of volume over price support. And remember, we had this break. This was the level of the breakout here at 233. And so that breakout has not been back tested yet. So remember what we were just talking about. Very common to see a breakout, a back test, and then a reacceleration higher. So keep that in the back of your mind that this breakout has not been back tested yet. And so a break of this rising channel would probably open the door for that back test. And then here's just a little granularity on the 30-minute chart. We've got this gap here right at about 240. And then we've got these, here's your intermediate levels on the way down. And so if you're actively trading it, you're probably on a 5, 10, 15, 30-minute chart. This is your granularity on those trades. I think this gap here is going to be pretty important. So let's move on to FATMAAN. Facebook filled this sizable gap and now is consolidating here above 334. And I always get concerned when I see this type of a setup. Why? Because we've got a fast move from here to here, and then that looks like a flat bear flag where you get a breakdown below 334, and then you get the A, B, C move down to 328, and you can just visualize in your head that measured move. Here's the first leg, and then you take that distance and add it on to the bear flag, and that brings you right down into 328. And you can see that there's a large volume over price bar there. There was a lot of reactions along that line, and I think if you break 334, you could go to 328 really fast. And that would be a good active trading sequence to the downside, because you can see you had four. You had 4 bars that reached down to 334 and found support. So that level is real and important. And if it breaks, that would give you a very objective downside bearish entry here at 334. And then you can see on the bullish path, you can see breaking back above this level here, and this flag would be important. And so that is your pivot there right around 336. Now, you'll often see when I have a gap that gets filled, I don't remove it from the chart right away, even though that technical event is over. And you can see that price remembers. There's muscle memory in those prices, because look, the gap was filled, but then price, when it tried to bounce, found the bottom side of the old gap and could not get above it. So price does have a memory. So you'll often see that I leave that filled gap on for a while until price either resolves higher or lower from there. So let's move on to Apple. I don't really see a trade here. It's just kind of been, moving sideways. I think you've got to see a break above 150, 150 or a breakdown below 150 to really do a whole lot. I mean, you can just see here, not much of momentum either way. So I think you just got to sit by and set your alarms if you're interested in trading it right here at 150, 150 and down at 150. And then if you get breaks above or below, then you might have something to work with. Tesla. Big rug pull yesterday, 12%, 140 billion wiped out of market cap. Elon took the brunt of that loss, but there were a ton of people that were participating in that short-term call gamma squeeze that just got wiped out yesterday. And that's a cautionary tale for anyone, that's in one of these big momentum trades, whether it's Nvidia or AMD or Tesla or Avis Car or GameStop or AMC. I mean, the list goes on. We've had quite a number of them. Just remember that as those market makers, crank the implied volatility, the price you're paying is going up, and then it doesn't take much to simply destroy your position. So if you're lucky enough or good enough to win in the early going, keep your risk the same. So for instance, if you're buying calls that are worth $1,000 and then you make $2,000, right? So now your stake is $3,000, the $1,000 you started with plus the $2,000 that you gained. You've got to put some of that aside, because if you just go on this massive pyramid run where 1 becomes 3 and 3 becomes 9 and 9 becomes 20, that's very appealing. But if the music stops before you've decided that you're going to take some profits, you're wiped out. So I'm not going to tell you not to trade it, but what I am going to tell you is what you could do is you could say, okay, my original stake was $1,000 and I want to make and I've doubled or tripled my money. So I'm going to keep that $2,000 aside, my original $1,000 and $1,000 that I made. So I'm up, 100%. I doubled it. And now I've got $1,000 to use on lottery picks. And then, so if you can keep the music playing and you can build it up even more, at least in the back of your mind, I can't lose. I've got my original stake set aside. I've got the amount that I made that I set aside. Anything can happen and I'll be a winner. And that's a good feeling to have. But if you go on this massive pyramiding run and you've got all these paper profits and they pull the rug like this, you're wiped out. And you'll be wiped out psychologically as well. So be careful about that. So enough preaching. Let's get into the technicals. Tesla, 12% down. Very interesting technical action. Why? Came right down to the large volume over price bar here. Not large in the whole scope of things, but large, the largest one on this run up. So that comes in right at $1,000, and I think that's your next big level on Tesla. You break 1,000, you're probably going to come down here to the 50 EMA, fill this gap, and that would bring you in at around 910. I did want to show you the 60-minute action. And if you were a Tesla trader or were interested in it or were watching it, I mean, the technicals, I mean, they played out perfectly. I mean, we had this level in here at 1170, and you got that breakdown, and you actually had time to get in. It wasn't just like a pre-market nightmare, because you can see that there were no gaps. So you had a chance to get in at 1170, 1160. I mean, pick a number. And we also had the void in the chart marked where there wasn't a lot of technical action. There wasn't a lot of trading. There was no volume over price support. And what I always say is, when price goes into these voids, you can get price moving very quickly. And you got that fast flush, and it came right down to this gap. There was a momentum overshoot that filled it. Then it bounced up, and look where it bounced. It bounced right into this prior level that we had, and at 1080, and then that contained it. And you had a couple bars that tried, but then it moved down. You broke this 1050 bar or 1050 level, and then you came right down to this 1020 level that we had on the chart, testing this low from back here in late October. So right now, as it stands, we've got, I would call it, a very thin level of support between 1020 and 1,000 on the daily chart. And then, if that were to break, then you're going to come down in here. You've got another void in the chart. This level, this highlighted level goes back, back in the charts. There is a thing there. But I think what would happen, just because of this momentum and this structure, that you would get this move down to 910 at least, because you've got an open gap there. And that's where support comes in on that rising channel on the daily chart. So whenever you're looking at a shorter time frame chart, it's always a good idea to go over to the next time frame higher, take a look at the important levels there, and then bring them across to your lower time frame charts, because they will be important there. So I think a break of 1020, certainly a break of 1,000 would send the ball rolling farther along. Microsoft, pretty simple setup. You've got a line of support here at 335. You can see all the reactions along that line. If you're long, you can stay long against 335. If you were to lose that, you see you've got a pretty good line of support at 332. Below 332, I think the ball would start rolling downhill. You've got some voids in the chart down here. Strong chart. I think you want to stay bullishly minded. And if you were not in and you saw the ball start rolling downhill, I would be looking for a place to get in, not a place to, oh my God, this is it, I'm going to get short. It's been a very strong chart. And if you want to short something that's weak, not short something that's strong. Nice move in Amazon yesterday when not a lot was going on to the upside. I don't know if that was Rivian, driven by the Rivian sentiment, but you had a nice level of support here at 34.90 that held. And then if you missed that move, you had a place to get in at this gap level right here at 35.50, and then you got a push up towards where to top out at 35.90. So I mean that in and of itself was a $40 move, but strong chart, strong action on a day that really not a lot was happening. So that was really nice trade if you were in it. Moving on to Google, much like the Microsoft chart, nothing really happening, but you've got a very nice line here at 29.60, and I would stay long against that. And certainly if you didn't want to mess around between 29.60 and 3,000, have your alarm at 3,000 and then buy an all-time high breakout when and if we get that. Netflix. We talked about the double top high. We talked about the move down. Has found some support here at 645. Now the level that it's got to take out here above is 660. I think if it breaks above that, I think you can be a buyer there. Just watch yourself, because this action here, I don't have it drawn in, but you can imagine a bear flag. If I were to draw in that classic bear flag pattern, you've got an impulsive move down, bear flag, and then your A, B, C move would bring you down right in this 620 to 625 range, and that would make perfect technical sense, if you will, if that were to play out like that. So be careful there. Semiconductors, we talked about. We've achieved our measured move target from way back when. We've got a nice line at 300. Short and sweet, stay long against 300. If 300 breaks and you've been long the whole way, just know your time frame. What are you shooting for? What's your target? If you're not in, and we got a pullback to 295 that held, if you're not in, I would be a buyer there. But I think your compelling short, if things fall apart, is a break of 295. Why? Because of this fast run up, big void in the chart, alarm 295, you lose 295, I think you got at least $10 of downside for a check back to the rising trend. This is pretty extended, so if there happens to be a problem in the market or with semis specifically, you definitely want to be getting out of your longs if 295 fails and getting short for a quick move down to 285. Now I wanted to show you housing has broken out above this level here at 74. You can see the prior high was at 76.5. What I've done here on this double bottom low is give you a measured move target of 82. So it's been extended. What I'd like to see here just technically is a little consolidation to give us time, or give the chart to relax a little bit, and then you could buy that breakout above 76.5. But if rates start heading up right away, you'll probably see this chart slow down. Obviously, this was a missed trade. Just going back and looking at it, this level here at 66 was a very objective place to get long. Why? You had 200 EMA support. You had support here, breakout here. So it's a shame I didn't catch that. But it's always good to look back at charts to see what you could have done and put that into your your calculator for the next time around, because these patterns repeat again and again and again. Gold pushing that 1835 level on futures, GC futures, and we've got this level here at 171. I think if you break that 1835 on gold futures, you can hopefully we'll get some FOMO buying activity. And if you've been in from down here, then you can ratchet up your stop to a little bit below 171. And just on a measured move basis on this double bottom, puts us up in the low 180s. So that would be really, really nice to see. But overall, really been underperforming, compared to Bitcoin and nearly everything else. We take a few steps forward and then they knock it down again. So maybe this time will be the time, but 171 is certainly an important level. And I wanted to show you this oil chart to wrap up this the thing this morning, our video. The big oil sell-off was 2 days, right? And now we're right back up to the highs. I think oil is going higher. If you're not in and you see this breakout, get in. You can trade XOP. You can trade the micro mini futures on CL, and I believe that ticker is MCL. If you want to trade the micro mini futures, you could trade XOP. You could trade OIH, Oil Services. You can pick yourself a name, Apache, Devon, go right on down the list. You can trade XLE, which is primarily Chevron and Exxon. A lot of different ways to play, but I think you're going to see oil break out here. And I would be looking to get long on dips and stay long or buy breakouts if you're not in. So let's wrap it up there. Big day today on the macro front. Got the Rivian IPO. We've got CPI coming out in an hour. We've got Atlanta Fed inflation expectations. We've got Tesla to watch. So plenty of things to do. I hope you gain some benefit out of the video. I really appreciate your time this morning. This has been Chris Buss with Traders Profit Compass. Talk to you next time.